After opening with a stellar 3% surge, Adani green stocks pair down. Investors are gung-ho on the firm, which is expected to raise $2 billion by next year.
And finally, COVID cases continue to increase in the country. 328 active cases have been reported in the last 24 hours.
Welcome, you're watching Market IQ. I'm Tamanna Inamdar, and with me is my colleague Pallavi. Let's take a quick look at where markets are. Not doing too badly at all. What started as a tepid day has picked up some amount of steam. The Nifty about 0.5% up. IT stocks are the ones which are taking a bit of a beating on the back of Infosys losing out a pretty big AI order to the tune of $1.5 billion. Even Wipro, which had run up in Friday trade on the possibility of a leadership change, has lost some steam after that news was debunked by the company itself. But what's really working in today's trade? Well, it continues to be the PSU stocks, which are doing well, as are media stocks as well. So media companies are doing well. Oil and gas, energy, metal, all up in the green today as we look at the markets.
Infosys has said that a global company has elected to terminate the Memorandum of Understanding signed in September 2023, and the parties will not be pursuing the master agreement. The stock is trading in the red and is dragging the IT index down with it as well. We have Hemant joining us with more.
So Infosys, the stock has really taken a beating, 2.5% down on day, and this comes after a global company terminated a $1.5 billion contract that was supposed to be spread out over 15 years with the company just today. And what happened really is that in Q2, the company reported its largest contract value in terms of deal wins, and this deal was supposed to be a part of that. The overall deal wins in Q2 stood at 7.7 billion numbers, and this really lowers the revenue visibility for the IT major in the near to mid-term. Now, additionally, what has been souring the sentiment is that the management, you're seeing the CFO that resigned just 2 weeks back, Mr. Nilanjan Roy, after being associated with the company for 6 years. Secondly, if you remember, in Q2, the company lowered its guidance in terms of revenue growth for FY24 at now pegging it around 1 to 2.5% earlier, which stood at 1 to 3.5%. Secondly, while total contract values are substantial, the annual contract accretion tends to be lower because of the fact that these deals are spread over a larger period. So these are the factors that have really been weighing on the stock today, and it's one of the top losers on Nifty IT.
Right, thank you for that, Himansh, there with all of those details. Yeah, the stock is 1.5% down even now. Now, 3 companies made their debut on Dalal Street today, and all eyes on these SME IPOs, which have been seeing some stellar openings, but that was not necessarily the case today. Muthoot Microfinance, Suraj Estate, and Moti Sons Jewelers have listed today, and out of them, one is firing, which is Moti Sons Jewelers, up about 88% as compared to issue price, of course. But Suraj Estate and Muthoot Microfinance have lost money for those who got allotment today. Now, we had a conversation with all of the managements that have seen these debuts. Listen in to what they said.
Our quarterly first result was very good, like compared to last year, as you can see, and as seeing the growth trend change in the market, like demand is also changing, more festivals also coming, so we can see a demand change, and we think that we can have a good growth in that.
How was the first half of the year, September quarter?
Yeah, it has been good compared to last year. We did the percentage of revenue has increased, and as you can see, the PAT has also increased. The PAT margin is also like it is around 6.5%.
First of all, it's a proud moment for all of us to be listed on stock exchange today. And Muthoot Microfinance 13 years ago, when we started, Mr. Thomas Muthoot and myself had the vision to build an institution which creates impact at the bottom of the pyramid. Today, with 3.2 million customers, 10,800 crores of asset under management, 1,340 branches spread across 18 states and 329 districts, 12,200 employees, we feel that we have created an institution which is sizable and creating its own respect in the market. I think the growth is immense, the potential is immense. As we all know, there are around 17 crore rural households which are potentially microfinance customers. Today, the industry caters to around 7.5 crore households, so that much more potential.
It's an entirely fresh issuance of shares, so we plan to raise 400 crores, out of which 285 will be for the debt repayment or prepayment. 35 crores is earmarked for acquisition of new land, and the balance would be obviously a GCP portion.
Right. So when you say acquisition of new land, that means that you're obviously planning to launch a few projects, because I assume that you technically take the third party to construct the sites, if I'm not wrong. So when we talk about new launches, do you have any sort of targets in mind, or do you have any sorts of period that you're planning to have these many launches at these many areas, and specifically which geographical area, if you could help us understand that?
We have about 3 land parcels on Mount Perry. So I think that would be the next market we'll be targeting. So Bandra would be the market we'll be targeting next. And we have a commercial development on Tulsi Pipe Road. So it's about 1 lakh square feet of carpet. So that would be the launches which you will be targeting. 1 in commercial and of course about 3 in residential.
Well, considering what we saw up until now, with today's IPOs, it seems to be a little bit of a reality check, or the first instances of a reality check. We'll see how it pans out from here on. But moving on, J. Kumar Infra is the stock of the day, up almost 20% on an upgrade from CLSA. The company expects its order book to surpass 25,000 crore rupees by 2027, driven mostly by metro projects. Listen in to what Nalan Gupta, Managing Director of J. Kumar Infra Projects, had to say earlier today.
In terms of the revenue for the Q4, I wouldn't say that it would add anything to it, because the orders that we have bagged is mainly in Q3. So the top line to show the results would take some time. But yes, FY25 should be somewhat better than what we have expected and the guidance given by us for FY25. But it would be too early for us to comment on the real impact, because it depends on how the project moves. So, but yes, going forward, the top line should be much better than what we are expecting. And for the new order books, I would say that we are still in the process of bidding for projects worth around 30 to 35,000 crores. So in this coming 6 to 9 months time. So I think even FY24-25 should be a good year with respect to order books and the top line.
And electric scooter maker Ola Electric is set to raise 5,500 crores through a fresh issue. The total size of the IPO, of course, is around 7,000 crores, including the OFS. My colleagues Sajid and Hiral are here to break down the details of what Ola is planning and where the value lies. Let me go across to Hiral first. Hiral, what are the factors that we're watching out for?
Absolutely. A 7,000 crore IPO is what Ola is launching. And the key over here is that it's an auto company coming up with an IPO after nearly 2 decades. Now, Sajid, let me come to you on this. Firstly, how are they planning to utilize the funds? And secondly, what are valuations stacking up to?
So if you look at the IPO, it's coming to somewhere around 7,000 odd crores, which includes 5,500 crores of fresh issue. That 5,500 crores also includes 1,100 crores of pre-IPO placement that's going to happen before the RHP is filed with the ROC. So what we are looking at is that, roughly the OFS, which is 9.51 crore shares, of which 50% is Bhavish Agarwal, who's offering his shares. The total amount would be roughly around 1,400 crores or so, and that takes up the total valuation of the total value of the IPO to 7,000 1,000 crores. Now, if you look at the valuation part of it, now you have to look at from the point of view of how much stake is going to come up. It's going to be around 11.85% stake. The 1,100 crores pre-IPO portion would be around 1.85%. So 10% minimum IPO which they have to come out with in the market. Based on that, it comes to somewhere around, the valuation comes around 7.08 at the upper end of the price band. Now the price is somewhere around 144 to 150 range. At 144, the valuation comes to $7 billion. At 140, it comes to roughly around 56,000 odd dollars or so, 56,000 crores or so. So 6.8 to $7 billion is the valuation given to Ola Electric at this point in time.
Right. So taking this valuation into consideration, the next question or thought process I have is, how is EV penetrated in the Indian market versus the global markets? Because clearly the trend tells you that EV penetration in two-wheelers is way higher in India as compared to the four-wheelers. And if that is the situation, how does it augur for a Ola, as well as, which are the regions which are being growth drivers?
That's interesting, because EV penetration took off very slowly. Post 21-22, it picked up because of the FAME, especially two-wheelers. Today, as we speak, nearly 5% of the total vehicles or two-wheelers sold is around is electric in nature, and Ola has a 30 to 35% share of the electric vehicle market there. But the bigger issue is that their projection is that by 2028 or FY28, the penetration is going to go up to 50%. So there is a big runway and a steep runway for many of the electric two-wheeler players to cater to that thing, because 50% of the total two-wheelers sold are going to be electric in nature by 2028, and that is where you have to look at which geographies are working. Many states like Maharashtra and Goa have a huge higher EV penetration. Now Goa has nearly 16.6. It's understandable, it's a tourist state, and so they're looking at much more value in terms of fuel. Maharashtra has nearly 9.8. You have Karnataka and Kerala, which is about 10% penetration, which means that for every 100 scooters, 10 scooters are electric in nature. You go into a much more granular level for cities, and you see that in a city like Kolhapur has a 23% penetration, which is there. Bengaluru has 17, Surat and Ajmer have 15 and 13%. So small 2-tier, 3-tiered cities have a higher penetration compared to urban cities, and Mumbai, Mumbai has just 5% and Kolkata has 3%. So you can see that the sales are growing very fast in the tier 2 and tier 3 cities.
So this takes me to the next part of it, as to how does the market share of Ola then stack up, because multiple players that are coming in. However, you still have a Ola which is the market leader, right? And what is the future run rate then looking like, taking the penetration into consideration, the kind of dynamics we are building for the next, say, 2 to 3 years?
So, electric vehicles have been there for the last 5 years, from 2018 onwards, but Ola's financial operations have begun only in January of 2022, which basically means that there's very limited history of financials also available, and also the performance available, but it has come with a bang, and it has taken a share of 30-35% in the entire EV space, where some of the ICE players have come as an afterthought, and they don't have that much of market share there. But there are other players, Okinawa and others, who are there in that market, which is purely electric in nature. If you look at the run rate at which Ola has been selling on a monthly basis, in January it was around 1,100 units, which also, and by the time we end December, it's going to be 22 to 24,000 units per month. And this year or this financial FY24, they will be clocking somewhere around 2.7 lakh units as a whole in sales, and the sales are sales directly to the consumers and not to the dealers.
Right. With this now, if you see the two-wheeler sales data or even the financials of Ola, clearly what it's telling you is that the revenue per unit from a FY23 to a 24 is increasing, and secondly, the revenues are nearly doubling, right, on a year-on-year year-on-year basis. Firstly, what is the reason for the revenue per unit to increase in this fashion? And secondly, is that the only reason why the revenues are increasing?
So there's an operational leverage play which is happening here. As the units go up, they are getting that benefit of the volumes which is coming into play. Also the fact that the prices of cells and BMS, which accounts for nearly 25% of the total cost of acquisition of or material cost of goods consumed, is coming down. It has fallen drastically in the last 1.5 years, and that's also bringing down the cost for them. Cost, if you look at for Ola, it's coming to 76%. The cost of goods consumed in the P&L is coming to 76% for the first quarter. Now that's compared to 84% in FY23. So it's coming down drastically for them, and that's what is creating. When you ask me that why is the per unit price has gone up, that's because of the models which have been selling. S1 Pro has been selling higher, 60% volumes have been coming from S1 Pro. S1X, which is a smaller, lower version in terms of pricing points, it's now picking up. So there will be a mix and product mix that will play into.
So your high value products are
increasing. So the average cost per unit is going up in FY24.
Right. So Sajid, my two questions to you: 23-24 a loss. When does the company break even or hit profitability at what number in terms of sales? And two, how does it stack up as compared to the other traditional ICE players from a valuation perspective?
So just to put in perspective, we are using a matrix of average revenue per unit sold as a matrix to find out what the revenue could be. And if we are saying that Ola will end FY24 with say somewhere around 2.7 lakh units, then it's coming to a revenue of roughly around 4,800 or so. That could be the top line for Ola in FY24. Now, Ola has only given us Q1 numbers. These numbers have been derived based on the unit which they are going to sell. And based on that, in Q1 they had a gross margin of roughly around 12.5. But there has been a dip in the second quarter because of the FAME subsidy going off and others. So we're taking a 10% average gross margin, which will give them roughly around 479 crores in gross margin there, and EBITDA will be loss, and a profit and there will be a loss at the net level at 730 odd crores. That's what we expect for FY24. Now these are all estimates based on this. There is a breaking point which is there. The breaking point being that if they're able to sell 3 lakh units and they are able to bring down the average cost of goods consumed to below 70%, then they are EBITDA positive and they may be marginally PAT positive. But there are multiple factors coming in because you have an Ola factory, Gigafactory also coming into play. There's cost associated with that, which is expected to start operational by FY25 to get that the PLI incentive which they are getting. Now they are building some 20 gigawatt of factory, which is for 1 gigawatt in year 1, 5 in year 2, 10 in year 3, and 20 in year 4. So that's a capex which is going to come in over a period of time, and they will plan to use it through internal accrual there.
Right, so I think 3 lakhs becomes the magic number for a Ola, taking the other parameters, what you mentioned into consideration to actually break even or hit profitability. And how is the comparison with the traditional ICE players?
They are varied between 2 to 4 times market cap to sales, and while Ola is valued at 12 times, over 12 times. So that's something which we will have to see going forward, how the market is going to value electric players going forward. It's valued at 12 times. There's quite a few triggers coming in the future, and we have to see how the institutions are looking at a pure EV player which is coming into the market after 20 years.
Thank you so much, Hiral and Sajid. Well, that's an interesting one to watch out for, to say the very least. Moving on, the Paytm stock is lower after the company has fired 1,000 employees to streamline operations and reduce costs. The firm will deploy AI to substitute the workforce that's being let go. Rishabh joins in with more.
Thanks, Pallavi. The Paytm stock is down. It was down about 2% at day's low. It has recovered slightly now. It's down about 1% now. Over the weekend, reports did come in that Paytm has let go of about 1,000 employees. That could equate to about 10% of its workforce. And what Paytm is saying is that it will save about 10 to 15% in employee costs. Now, why that is important is because they have a deadline set internally to reach a net profitability sort of a level by FY25. Analysts at Goldman Sachs also believe that Paytm has the potential to become the most profitable Indian internet company. The first wave of startups that went public in around 2021, Zomato, Nykaa, Cartrade, all of them have posted a certain number in black, but Paytm is lagging behind. So there's that pressure as well. On the stock side, the stock has been down over the past month. If we look at a month ago, it is down about 30% since last month, and that coincides when the RBI took action against unsecured loans. That also impacted a lot of commentary that came in on Paytm giving away loans lesser than 50,000 rupees. So an interesting one to watch.
All right, we'll take a very short break on Market IQ, but do stay tuned. A lot more coming up on the other side. watching Market IQ on NDTV Profit. Now talking about the realty space which has been buzzing. Godrej Properties has sold its highest ever sales value from its launch of its Gurugram residential project of over 2,600 crore rupees. That stock retaining some of its gains for the day at 1% up. This has surpassed its previous best of 2,000 crore rupees. My colleague Saloni joining now with all details of the project. Saloni, how will this aid Godrej's plans for meeting its guidance for the financial year?
Right, Tamanna, as you mentioned, they have sold over 600 luxury home units for rupees 2,600 crore, surpassing their previous, highest value of rupees 2,000 crore, which again was from an NCR project in Noida. So they have been going very big on their, NCR market as well. And remember, they are actually a Mumbai-based realty firm. So as you mentioned, how this will aid to their guidance is that they have a booking value of rupees 14,000 crore, and as of Q2 they have achieved of about 52% of their guidance value. So now with this was one of the projects that they were actually believing will lead to them exceeding the guidance. So clearly it looks like they will be exceeding that, and also their business development guidance of rupees 15,000 crore, which they achieved over 48% as of Q2. So the company has been very confident, and they had mentioned that Q2 the second half launches and the second half robust pipeline and the demand that they have, especially in the luxury segment, is something that's going to help them, so that we can clearly see in terms of the numbers. And the company also plans to launch 4 new projects in Gurgaon in 2024, along with certain other projects that it has in Mumbai as well as in Bangalore. So lots to see in this space.
Thanks a lot for that, Saloni. Now, over 100 flights have been delayed and a number of flights have been cancelled. That's because of poor visibility in the national capital. Delhi is shrouded in smog. My colleague Vinay joins us to bring us updates on what's the situation currently there.
Well, Pallavi, as you said, that over 100 domestic and international flights are delayed due to smog, and that is affecting the visibility of the flights. So it is impacting the operations of the airlines as well as at the airport. Delhi airport had tweeted earlier saying that the non-CAT 3 compliant flights may get affected. So CAT 3 is a combination of systems that allows safe landings in adverse weather conditions. So flights that are not equipped with the required equipment may not be allowed to land at Delhi airport due to these visibility issues. So travelers returning from the extended weekend holidays may face difficulties in returning to their homes or their work. So these challenges of visibility come around when the travel is also at the peak, when daily passenger traffic is hovering around the 4.5 lakh mark, which is much higher than the average of 4.2 lakh mark, which was last year.
Right. Thank you so much for that, Vinay. So this is a daily, or I should say an annual travail for those living in Delhi, where fog does tend to derail quite a few flights. Now, that's all the time we have on this edition of Market IQ, but stay tuned. A lot more coming up on NDTV Profit. Thank you for watching.